This is our Forex blog for April 19th, 2012. And like we have for the last 2 days, I'm going over our currency meter using the new Build Your Own Trend currency meter. What's unique about this is I have gotten our Build Your Own Trend histogram to work with the individual synthetic pairs. So we compare each currency to every other one using these multiple different time frame and different statistical tools. Some of them measure the percentage currencies going up or down, whatever the time frame with whatever the weight, and the bottom two measure the intensity. So intensity is about 45% of the weight here, and the directional tools add up to about 55% of the weight. And what's really unique about this is I've also gotten it to work for the synthetic, single currencies, dollar, yen, euro, on a range chart, which means when the market's really moving around a lot, like you can see here in the yen, this is a 5-hour period. Notice how many bars there are. Over the next 5 hours, you can see there's a little bit fewer bars, there's less activity. And so the more active the market is, the more bars there are, the more intuitive ability you have to see what the trend is. And you also notice on the pullbacks, because it's actually based on number of pips moved, that if it goes down over a lot of bars with incredible intensity at and above the dotted 80 line, and then the pullback phase is very short and without much intensity, and especially when it doesn't even hit the 80 level, that trend's likely to continue. And underneath that, I have the daily trend, weekly trend, and monthly trend, and you can see the yen extremely weak today. Let's scroll back and look at some of the other currencies earlier in the day, so we can look to find the strong ones. The pound, very strong earlier in the day until about 3:30. That would be an excellent one to buy against the weak yen because it's strong on all time frames. This is pretty much as much of a no-brainer as you can get. Let's scroll forward on this chart to the 19th. And so earlier today, as you can see, this currency, after this pullback right here, you want to get in on it, and it goes from around 130.40 all the way up to 131.10. And this is a Fibonacci retracement level in dark gray, Fibonacci profit target in dark gray, Fibonacci retracement level in light gray. These are areas that I draw each night to give you very high probability support resistance areas. A lot of people don't know how to use fibs. Most people realize that they work. I spend 30 or 40 minutes every night for my own trading and for our customers' trading to put these in the software. So hopefully that tells you something. If anyone spends 100 hours a year working on something, they obviously really believe it works. I mean, and I use it for my own trading. It's much better, instead of having a sheet of paper with these levels on it, to have them just right on your chart. So this is likely to be major resistance up here, and it's not likely to go over there. If you wanted to buy it right here in this pullback, for instance, 71, your profit target's about 90. It's 18 pips. It's not, you can decide whether you want to risk 10 pips to make 18 pips. In this case, it shot a little bit past that, but this is major resistance area up here. Let's look at some of the other examples today. The dollar also was weak starting the day out. The daily, weekly, monthly trends down. So you could trade the pound versus the dollar too. You want to buy the pound dollar. Let's look at a range chart here because it's superior to regular time charts. You have a nice multi-hour rectangle pattern here when it breaks out, and you might want to wait for it to go above the previous month's high right here at 38. You can see our trailing stop got you out up here at 67, almost 30 pips. Our upper containment bands most of the time are the end of the move. And we also have FX trend reversal dot right here. When you get one of these big yellow dots, usually within 3 to 5 hours you're going to get a 30 to 80 pip reversal. And you can see, it pulled back about 50 pips right here, and it might have continued on lower. When you see that pattern earlier in the day and it rallies up, like you can see today, the pound was strong and the dollar was weak most of the day except for this pullback area right here. But when it comes back up to the highs and you see something like this, you can do some counter trend trades up at the high. I typically wait for 1 bar of red sell it when it goes 1 pip underneath there. I put my stop above here. And because you're trading against the trend, don't be greedy and expecting 20, 30, 40 pips. Sometimes you'll get those, but typically I'll put my stop right above the bar's high, move it down above the previous bar's high, move it down, move it down, move it down. It's kind of going sideways here. I get out. But, whether it's 6 or 12 pips, they add up. So don't be afraid to do that. Here's another one that might have only given you 5 pips. The CAD also was strong today on almost all time frames. So you could sell the dollar CAD. Let's take a look at this. And this is earlier in the day, obviously. Let's go back and look at that. This is until about 6:30 right here when the dollar started to get strong. So when you see on the right-hand side of the chart, it's 6:30 right here. That's when the dollar started to get strong. It continued up. But earlier in the day, you're looking for sells. You have a narrow range pattern right here on your chart. Those typically will lead to trends. You might have sold there, lost 8 pips, sold again right here when it broke that low, and it went all the way down to 81. It only fell about 20 pips. If you use our trailing stop, you might have got out here with only about 7 or 8 pips. But you can see using the currency meter that after about 6:30 right here, the dollar became really strong. And it was stronger than the yen as well. The daily trend is much weaker on the yen, as is the weekly trend, than it is here on the dollar, which goes, I used a light shade of pink in there to show that the weakness is dissipating. Usually when you have extreme weakness, real-time strength comes in, you see this go pink. It's only a matter of time before the daily trend shifts up, whether it's 30 minutes or an hour or so. So let's scroll forward. If you're a U.S. trader, what do you trade, during, let's just say 7 to 11, which is a pretty decent time to trade if you're in the U.S. Well, the pound's strong on all time frames, but the dollar and the yen both became strong. You don't want to buy a strong currency versus another one, but the Australian is weak, so you could, buy the pound Australian. These are the high probability trades. So here's 7 o'clock in the U.S. session. Goes up. You buy this pullback. It goes up about 30 pips there. Buy this pullback right here at 55.10. It went all the way up to 63. So it went up 53 pips. There are plenty of opportunities to buy. And this is a perfect example of why we use the currency meter. If you don't have the currency meter, like most traders don't have our tools. We have a small fraction of 1% of retail Forex traders. They're just most traders trade the euro dollar or the pound dollar. Those are the two most popular ones that people tell me they trade. And from what I see people's trading reports at, that's pretty much 80-90% of what retail traders trade. If you were just focusing on the pound today and during the U.S. session, the pound and the dollar were both strong. So there was a nice little smooth move up here, but it didn't move as many pips as the other one. And looking at the currency meter, most of the time when you have two currencies that are strong like this, you can see that the dollar went weak again here at 9, and that's the reason for the big move up. But between 7:30 and 8:30, they were both strong. Let's go back and look at that chart, 7:30 to 8:30. Here's 7:30. Here's 8:30. And when both currencies are strong during the same time or weak, you're going to get very choppy, non-directional trade like this. It can go down, up slightly more, down slightly less. I mean, it might have a slight bias going up or down, but nonetheless, you're not going to get trends when both currencies are both green or both red. Just like, when the dollar was weak and the yen was weak, starting for most of the early morning. This is one of the reasons why I don't personally like to trade the dollar yen, because it's oftentimes very choppy. Notice from midnight to about 4, you had this one somewhat decent 15 pip move up. That's only 15 pips. That's all it did. And it went down 10 pips, up, down 10 pips, up, down. When two currencies are strong or weak, you don't get good trends. And this is the whole purpose of this. So the Australian was also weak last night. And so you could have also bought the pound Australian. The pound's strongest on all time frames. And notice If all you did was look for buys, you had a small win right here. You might have had a break even, waiting for it to break out over the high right here. If you got out with a trailing stop, you maybe lost 5 pips. And at that point, in at 89 or 90 here, you get out with a trailing stop up at 39. You made about 50 pips. Everything's green. Daily trend strong, weekly trend strong, monthly trend strong. And this was really, if you really want to wait and take the highest probability trades, wait for a breakout with incredible momentum. Buy the next pullback like this. When it breaks that trend line, you go in, especially if the pullback has almost no weakness. Everything's dark green. It's pretty much a no-brainer trade. Probably 80% of the time when you buy these, not only are you going to make money, but it's going to go to the fib target. If it shoots through the first fib target, you usually want to exit at the second fib target. And that's pretty much in a nutshell how I do the majority of my trades. There's a bunch of other systems I look for, and if I spot them in real time, I take them. But in a nutshell, I'm always looking to try to trade with the trend and find the momentum moves. Now you can see the euro dollar did change direction later in the day. The CAD was weak, but the CAD has a weekly monthly trend that's up. If I see the New Zealand and Australian that's weak and all time frames are down, I'd much rather buy the euro versus the weaker ones, and the Australian being the weaker between the two. If you look to buy the euro Australian today, just like with the euro or the pound Australian, it's going to go straight up, as you can see here. So whether you got in when it broke above the hourly right here, or when it came up to the previous day's high in the monthly pivot right here, when it broke out right here at 80, notice it went all the way up to the 30 level. It's a 50 pip move.